All right, here we go. Welcome back to Stocks by the Numbers, and I wanted to do just a quick look here at Smith Wesson Brands Incorporated, ticker symbol SWBI, SWBI, listed here on the NASDAQ. This is a firearm manufacturer. Smith Wesson obviously goes back to, I think it's like 1859 or something like that. But I looked at this stock really only one time. It was in one of those earnings prediction videos, and then we did an earnings update. It was after this day here when they reported earnings. At the time, we had looked like a rising wedge, but I said, in my opinion, I would consider calls, shares on SWBI, and the stock popped. You can see went up to about 18, and then throughout the rest of 2024, it just continued to drop down. Recently, they had a little bit of a light quarter, as you see, missing on the EPS side, 11 cents. Analysts were expecting 16.5 cents. Missed that by about 33%. Revenue came in light as well. Analysts expecting about 133.5 million. Company brings in 127.1 million, missing by 6.4 million, or almost 5%. So firearm sales have been weak, and I know people bring up this sector when we speak about presidential elections, and of course we recently have Trump back in, so not many people are talking about, really, in my eyes, the firearm sector or even the ammunition sector, right? We looked at POW recently, and if you go back to election day, I believe the firearm stocks like SWBI and Sturm Ruger, like they didn't see much of a reaction. POW actually saw the reaction. So the way it may have been interpreted is that if we're seeing kind of just like slowing or plateauing of demand from the firearms themselves, then perhaps the bulk of the sales have already been accounted for, and now people will either, perhaps buy accessories, or they'll look for just straight ammunition because they already have the firearms, right? So I can appreciate the fact if the outlook has been kind of weak, and we can even see 2 quarters ago as well, the company misses. Analysts were expecting 102.5 million. The company brings in 86.6 million, right? So pretty big miss by over 15.5%. So if we're looking at softening of demand, then again, I can appreciate the fact why they chunked the stock down. Fundamentally, in my opinion, the company actually looks pretty decent in the numbers. So we could make the argument that this is a little bit of an overreaction. But the one thing I will say is that now moving forward over the next couple of years, we technically, in my opinion, shouldn't really have any of these potential political regulation issues, right? Even if you go back, I will give him credit, and President Trump, even if you go back to like 2016, I remember specifically because I was curious to hear how he would answer questions pertaining to any increase or decrease in regulations surrounding firearms, and how he felt about the Second Amendment. And I remember that I think it was one of the interviews, like when they first started to come in 2016, and they were all like trying to interview him in Trump Tower. And it was one of those interviews, and I remember they asked him like, oh, what do you think about background checks? You're going to beef him up. Like, what do you think about that? And his just initial gut response right off the cuff was that like he would more than likely keep, I would say, most of these precautions in place. But even when specifically asked about the background checks, I know he responded and said that you have to be very careful when you're talking about any like increased regulations or beefing up any existing or new regulations, because when you do so, you're slowly impeding on the Second Amendment, which, first off, in my opinion, as an American, that's a phenomenal answer. But obviously, on the flip side, I can appreciate the fact, we want to make sure who's who, and we understand exactly who these people are before they get their firearms. So, I can kind of appreciate both sides of that. But basically, the point of all that was that if he's pro Second Amendment, something like like a ban coming down on some sort of firearm or something like that, but increased regulation, as we were speculating. I don't think, in my opinion, anything like that is going to come to light under this administration over the next couple of years, which means that obviously that's a good thing, right? If you're this company, if you're in this sector, that's a good thing. But on the flip side now it's all about the numbers, right? And the numbers, as we saw over the last couple of quarters, have been kind of light. So now it's really up to the company and the way they advertise, the way they're able to push their sales. But I will say the good thing is they posted their 10Q, obviously, back when they reported earnings, and they break down in there that a lot of the like newer, more innovative um, products that they've been bringing to the table, that's where a bulk of the income is coming from, right? So we have our loyal customers who are always going to buy the classics, and of course we have some newer customers coming in looking at newer models. Perhaps maybe it's the first firearm they're buying, and we did have a lot of turmoil here domestically. And I know a lot of people are still kind of speculating, maybe kind of fanning that flame, I guess you can say, that, oh, stay on your toes. It's not done. Nothing's done yet. So that's why I can appreciate the fact that some people still have kind of that state of paranoia. But something like SWBI, I think, looks pretty healthy. And they started paying out their dividend. They've been consistently increasing it year over year. I think they recently spoke about getting a little bit more credit, beefing up the limit of the credit facility, I think. Let's get into some of this news. So this was back, looks like about 5 weeks ago, back when they reported earnings. Smith & Wesson cut to hold from buy by Craig Hallam. Again, we have a couple of downgrades here, of course, because the company just missed earnings. And we're kind of speculating that we're going to have a rocky year. So understandable that people are cutting their price targets. Craig Hallam from 18 down to 13. Lake Street, same thing, cut to hold from buy. Same exact price target. Excuse me. 18 down to 13. Downgraded, yep, hold to buy. 18 to 13. Yeah, found at 1852. Earnings 19.3 million last year. Now we're at 18.5 million. Gun business suffered. Analysts revised their 2025 projection, blamed declining consumer interest and sales for the downgrade. I'm motivated by regulatory concerns in the early 2010s. See what I mean? Like, I don't think, and some people may look at that as a negative, right? Okay, if there aren't any regulatory concerns, then people won't have that sense of urgency to where they have to purchase the firearms now, right? So you can make that argument that because that's not happening, it may hinder sales. But also on the flip side, I feel almost like if we do have like this reinvigorated spirit domestically here in the States, then also remember the people who love their firearms, whether they use it for hunting, sport, whatever, they're almost going to go, excuse me, almost going to go like above and beyond to celebrate the freedom and the Second Amendment, right? You understand what I'm saying? So you could, of course, it's all speculation, we know this, but you could kind of make the argument on both sides of that argument there. But I think it will be positive because I feel like also because the company recently started paying out the dividend and keeps increasing it, I feel like they say as well that they're trying to do the most they can for their shareholders, right? Paying out dividends, trying to consistently increase them. They're doing share buybacks when they can. So this is why they're trying to maximize share value and give back to shareholders. So that's why something like SWBI, I think, over the next, 3 to 4 years, we can say, for the bulk of this administration, I think it could be a good grower, in my opinion. Epidemic demand, early 2020s, yes, of course, that's when they saw a big surge in revenue, 2020 coming out as well into 2021. Firearm market is stabilizing. Firearm business has been cyclical. Times of great demand with slower expansion. Yep, it is. There are these ebbs and flows, I will say, of this sector. But again, I think they're holding steady. Companies concentrated on personal security. Smith & Wesson made investments in product innovation. Okay. Smith & Wesson kept its personal protection market share and raised it over the quarter despite these obstacles. Showed hope for the company's future. Constant product innovation and shareholder value dedication. Smith & Wesson keeps boosting share value by means of dividends, share buybacks. Okay. I just want to recap again. Bear with me. We're reading. Based on softer demand trends. We have reduced our expectations for the second half of fiscal 25. Company posted revised of 129.7 million, up 4% year over year. Looking for about 133. Right, cut the price target. We think we are in a more normalized demand environment and think single-digit sales growth is more likely next year with modest margin improvement. Okay, fair enough. Gun makers in the past, sales increased ahead of presidential elections. Again, that may be why as well it dropped so much after earnings, because now we're rolling into the new year with, again, as I stated, potentially completely removing that threat, if you will, of increased regulations surrounding firearms and firearm sales. So that's why, again, I can understand if money kind of potentially flowed out going into 2025. And I appreciate the fact that the company said, yeah, maybe the next 1 or 2 quarters we may struggle a little bit. But I still think that, in my opinion, I think it looks decent in the numbers. And of course, if it happens to drop down into the mid-low 9s or even the high 8s, obviously, you can add to the position and still collect that dividend. Smith & Wesson, okay. Shares fall. Softer demand. Said it expects third quarter sales to fall between 10 and 15% from last year. Analysts were expecting revenue 158.6 million, representing a 15% increase from a year earlier. That seems like a big jump up, in my opinion, from these analysts. 15% growth year over year, and again, we know we're talking about firearm sales, which they themselves say are cyclical. 15%, I don't know, in my opinion. Realistically, it should have been like 6%, 7% or something, right? 15% increase year over year for firearm company? Maybe if Trump lost. No, I'm just kidding. Quote, based on softer demand trends we have seen across the industry in recent months, we have reduced our expectations for the second half. Okay, so profits were up technically, 4.1 million as you see, compared with 2.5 million a year earlier. Still below expectations. Revenue increased 3.8%, but missed the mark. Okay. Wait, hold on. Increased 3.8%, right? And that's funny. What did I say, right? 6%? Obviously, they still would have came up below that expectation as well, but you understand my point. A little bit more realistic, I think, for a firearm business. But we can see, of course, there's a fire truck going by every time I make a video. But we can see gross profit representing a gross margin of 26.6% compared with 25.4% that quarter last year. Op income increase of 3.2 million or 85% from that quarter last year. Net income we looked at, 4.1 was 2.5. Net income per share, 9 cents, was 5 cents last year. Handgun sales increased by 6.2% due to new product introductions and a price increase, while long gun sales decreased by 10.6% due to the timing of new product launches and a shift to higher priced models. Handgun unit shipments increased by 19.9%, driven by a 19.2% increase in the sporting goods channel, while long gun unit shipments decreased by 17.9%, with a significant drop of 26.4% in the sporting goods channel. All right, so I guess, the sporters are going for, lighter, better controlled handguns, I guess. It is what it is. But again, something like that I feel as well, for the sporting goods segment specifically, I feel like something like that. Same thing, almost like the ebb and the flow, right? So we may turn around in 2 quarters, 3 quarters from now, all of a sudden these numbers will be flipped, right? And all of a sudden handgun sales shipments are down and long gun are up, right? So that's why even something like that, it is a significant drop, but it does seem like it's almost, well, here, shipments. down 17.9, handgun shipments up 19.9, right? So it's almost like they canceled each other out. So it seems like you had basically the same number of sales. It's just that people opted for the handgun as opposed to the long gun. That's how I'm looking at it. Newly introduced products accounted for 44.4% of net sales, including 6 new pistols and 3 new long guns, contributing significantly to the sales growth. Began manufacturing and distribution activities from its new Maryville facility, enhancing operational capacity. Fantastic. Company expects inventory levels to decline during the remainder of the fiscal year, indicating a strategic focus on aligning production with anticipated demand, right? So as you want it now, we're gonna get it ready for you. It's not gonna be, we're just gonna, build them out and just keep them lying around, keep the product lying around. So that should technically increase efficiency. But again, the actual sales, the number of sales yielding the revenue coming in, unfortunately, could be kind of hit or miss. But overall, in my opinion, I do like it. I think it's a decent company. 120 million in capex. Oh wait, relocation of its headquarters and operations to Tennessee. Okay. 120 mil capex creates 620 new jobs. Okay, that's good. Entered into a project agreement. New facility, okay. Through share repurchase programs, dividend distributions. During the 6 months ended October 31st, Smith & Wesson repurchased about 1.6 million shares of its common stock for $22.6 million. The board of directors authorized a new $50 million share repurchase program effective from September 20th, 24 through September 20th, 2025. Additionally, the company declared a regular quarterly dividend of 13 cents a share. The company also secured a revolving line of credit of $175 million with $100 million outstanding as of October 31st to support its liquidity needs. So I also think, again, even though revenue has dipped down over the last, 1, 2, 3 years, they technically still are net income positive. And, they're able to hold their heads above water. And because I feel the company looks healthy in the numbers on paper, they will more than likely always be able to tap in for credit. So that's why, unless revenue really drops off a cliff, all of a sudden, they bring in like half of what they're bringing in now, and now they're operating at losses. Unless something like that happens, in my opinion, not only should they be able to remain healthy on paper, but also they should have the liquidity to continue paying out shareholders. My opinion. Smith & Wesson plans to continue its strategic relocation to Tennessee. Yep. Okay. CapEx in 25. Company aims to reduce inventory levels and improve cash flow from operations. Also intends to leverage its new credit facility. Yep. To support ongoing operations and strategic initiatives. Company remains committed to returning capital to shareholders through dividends and share repurchases while maintaining financial flexibility to support growth. And of course, this breaks down every single risk. But yeah, I mean, they note that, the inventory levels are up, and now, right, what are they saying? We're building out this new facility, and now it's going to kind of be like, made to order, right? So that's why I feel like they're kind of in the midst of jumping over that hurdle. Yeah, revenue missed a couple of mil. Yeah, see, and this goes back, this was right after the election. See here, first week of November, ammo ticks up after Republican wins while gun makers miss out. So we saw shares of ammo, right, POW right here, up to 1.5 today, right? We just spoke about POW and the potential ascending triangle popping up and out to 1.5 to 160. Stock up to 1.5 today, okay. Shares of ammo are trending higher after former President Donald Trump won back the presidency. Republicans retook control of the Senate. Ammunition and firearms component maker stock is up 2.4% at the time. Republicans typically favor looser gun control policies. That's true. The makers of firearms aren't seeing the same lift as ammo. Shares of Sturm Ruger only slightly higher in pre-market. Smith & Wesson down 5% at the time. So again, that goes back to my original point that the ammo saw the pop as opposed to the firearms, because again, they may be looking at the point of, okay, firearm sales may be kind of accounted for already. So now we're going to see the surge in ammunition before we may see that resurgence cyclically in the firearm stocks, right? You understand? But you can see that this going from the absolute bottom here, this was back December, end of December, looks like 2000, coming up to, yeah, see, like that previous high, not that that previous low, I mean, not that absolute low, and just coming up right there to the bottom of that. That was September 3rd, 2019. I'm looking weekly now. There, but you can see, look, it's like right at the bottom of that candle, right at the bottom of that candle, essentially touches the, looks like the bottom body of this candle, and same here at this candle. And you can see that, and you can see the slight dip below that level and then bouncing back above it on multiple occasions, right? So again, it may not be exact to the cent, but in my opinion, this looks like a decent trend line to keep an eye on. And you can see that we had the dip last earnings, and look at how the stock was holding this specific trend line. And then, of course, we had the big drop last earnings. So in the technicals, of course, I draw out a bunch of my trend lines, and we talk about whether we can go higher or lower. However, we did have a pretty big drop here, and now we have a slight upward consolidation channel. So in the technicals, we could potentially be forming a bear flag, meaning we can drop and even go lower here into the high eights. 52-week range 968, so that would technically make new 52-week lows. If we come back here to this other longer term support trend line I have drawn out, you can see if we just come straight down to the bottom here, we're looking at just about $8 a share. So you do have the potential for about 20% downside here. But again, over the longer term, I think, in my opinion, I think it's going to be a decent hold. This is going from the lows here, the week of October 27, 2008, and that's coming up touching that bottom right there of September 30th, 2019. And you can see it almost touches that bottom as well when the lockdowns happened. So that is like, you know, a longer term, what was that, from 2008? So yeah, that's like a 17-year support trend line, right, that we're watching. So that's why if it does drop down to there and dance around, I can appreciate the fact if it might make you nervous. In my opinion, it may signal, again, as I said, that may be the low of the lows, right? We'll see. Because in the numbers here, the debt, right? First of all, look at that dividend coming out in 2020 and consistently increased every year since then, currently yielding a little less than 3% on the dividend yield. We can see the debt did increase, of course, because they have been struggling with softer sales the last quarter or two. But in my opinion, I don't know why. I do have a feeling they're going to turn it around. And I appreciate the fact if you come at me because it's kind of quote unquote a gut feeling, totally understandable. But I trust my gut. But we can see something like the free cash flow, right? Even though debt is up, at this time was about 104 million. Now we're up to 135 million. Last quarter, 107 million. So we took a big chunk up. But you can see here the free cash flow, negative 37.8 million. And for last quarter, minus 10.7 million. So definitely started reversing things like that, getting to that positive cash flow as they hinted at in that quarterly report. So, and you can see even before that, we had some healthy quarters with positive free cash flow, right? So if the company can maintain that, and again, keep the business healthy on paper, then they will, again, more than likely have more than enough, in my opinion, to not only keep their heads above water, but of course, continue to tap into the credit and pay out dividends and do share repurchases. Really shouldn't be an issue unless we really start to see revenue start to drop down hard. But cash on hand, about 39 million. So if we subtract cash from debt, we're at, we'll call it a minus 100 million, right? Negative 100 million. We come over here. We can see we had equity dip down to slightly sub 370 million. Book value holding at $8.35 a share, so it's only trading right now about 1.25 times book value, which could be viewed as pretty cheap, especially in this market. But we were at minus 100 million, so 369, so we'll call it 269, 270 million positive. Market cap 454 million. And if we look, we could look at last year's numbers for now. And you can see, again, even though revenue and net margins did drop down, you can see, look, 7.69% net margin for 2022, 7.39% net margin percent for 2023, right? So they're remaining profitable. And of course, in 2020, they brought in a touch over $1 billion. So about, twice the amount of sales. But again, we could view it as a lot of people who felt they needed one got one already. And that's why we're not seeing recurring sales, right? But technically, 2022 was their biggest drop, 479 million. Even in 2019, they did over $500 million, right? So they dipped down below $500 million. Then 2023, they bounce right back and bring in almost 536 billion. So that's why we could potentially see like another blah year, and then maybe 2025 will be their breakout. So we'll see what happens. But technically, if we add profit onto revenue, we're talking what? 575 million plus 260 and change is what? 850, 840, 850 million. Market cap right now, 454.5 million. In my opinion, this company has at least an 800 million to 900 million, quote unquote, fair value, in my opinion, the way I interpret my numbers, which would essentially be almost a double from here, which would bring us to close to $20 a share. So in my opinion, even though they had a rough couple of quarters, and again, it may remain soft for a quarter or two, so I understand why those analysts had to lower their price target. Believe it or not, in my opinion, that initial mark that they were looking for of $18, that's almost right on the head, in my opinion. So I would go out on a limb and say Smith & Wesson up to 18. But again, it's probably going to take a couple of quarters. But, it really depends on how you want to play it, right? If you don't want to marry yourself into this company, if this isn't something you see yourself holding for like the next 5 years, and you think that you can just find another brand name company that pays a healthy dividend and, do the compound investing with them, then, of course, that's extremely understandable. If some of you want to play this maybe just over the next 3 to 6 months, if we say hypothetically the stock doesn't move, we go into next earnings, let's say we're kind of in line, stock doesn't move, 3 months later, let's say they beat earnings, all of a sudden the stock runs up to 12.5, 13 a share. I mean, if you've been holding for a couple of quarters and now your overall position is up 25, 30%, God willing, then yeah, if you want to take the money and run, of course, that's entirely your own prerogative. Then you could look for another opportunity somewhere else. Or, just keep an eye on this, wait for it to come back down to 10, 9, right? And then maybe reposition again down the road. So, of course, we know we're all in different situations, but I do like SWBI because brand name, I feel, again, under President Trump, I don't think there's going to be any red tape. I think that they're undervalued in the numbers, especially now after taking that big drop. I know the EPS missed, but again, it's technically the first time over the last 4 quarters. In the numbers, again, I think it's undervalued. It's not trading at a high a multiple above the book. If we check these stats real quick, 15 times cash flow. Again, that was up to 21 and was single digits before that. And that's obviously going to slowly start to come down if the cash flow begins to come up as well. Trading less than 1 time sales. 13 times earnings. You can see even when it was on sale, you can see it was holding like 15, right around 16. Now it's down to 13. But again, I understand they're going through a little bit of a rough patch. That's why I'm saying we could potentially see them beat it up. And if it drops a point from here, it's going to make new lows. But in my opinion, I personally wouldn't be too nervous, but again, that's just me. We're all different. 1.25 times book, enterprise value, that's what another business would be willing to pay for it, supposedly, 550 million. So that's still 25% higher than the current valuation, right? So the quote-unquote, buyout price potentially of a competitor would value this at like 12.75 a share right now. Return percentages, yeah, technically kind of up and down. They were remaining positive. Gross margin drops to 25, back up to 35, been dropping since to 27. Still holding that 20 plus mark though. Again, something like this, if sales really drop off, we completely miss the mark, all of a sudden margins drop to like 11%, then I can understand if a bunch of people are running to hit the sell button and the stock really takes a hit. But you can't completely destroy a company like this because they do still have some of the numbers to back it up. Operating margin dipped down negative last quarter, bounced back positive here at 5.75%. EBITDA last quarter, 2 quarters ago, excuse me, was 8%. Now for last quarter, we're back up to 12%. So it seems like they're righting their wrongs, right? And the immediate negatives of, the influx, the building up of the inventory. Again, they're addressing that problem, building out their new facility, and they're going to kind of hold off on I guess, kind of trying to stay ahead of the curve with keeping inventory on hand, right? So a lot of these concerns are being addressed, if you will. A lot of these concerns are being addressed, in my opinion. Asset turnover, yeah, dropping down. Our debt ratios are up. Yep, we saw debt jump from 100 million to 135 million. But again, we can look at a company like this, and that's why, they'll try to beat it up. And I appreciate the fact if numbers are potentially going to come in light. But before this, the company was doing more than fine. And now we just have some light quarters. And as I said, a lot of people may have been waiting for the elections to take place. A lot of people may be waiting for after the inauguration before they buy a firearm. Who knows? Who knows? It's still unknown what is in the future, what is on the horizon. So I have a feeling that firearm sales actually are going to tick back up. But that's just my opinion. And looking at the EPS side, again, 2 quarters ago, right in line. Last quarter, they missed. And you can see back here, they missed in Q2 of 23. 5 beats, 2 misses, and a meet for the last 8 quarters. So that's why, more times than not, right? That's what I mean. There's a quiet stock, might not have a lot of eyes on it. People may not care about it. But technically here on paper, I mean, they're beating more times than not. Paying out the dividend, increasing it. Yes, so yeah, this is for the previous year, but we can see that we did technically have the bump up from 22 to 23. Look at Asia. Look at the sales in Asia jumping up to over 9.33 million in 2023. 2022 was 5.4 million. 2023, 9.35 million. That's the most going back 2018, 2017. Very nice. Latin America up to 5.31 million. Same thing. That's the most we've seen going back to 2017. All others international. Okay, that kind of narrows it down. Europe, yeah, Europe has pretty strict laws. But good ticks up there in Latin America and Asia. Very nice. But again, yeah, in the technicals, if we want to say we're keeping it below the moving average, you can see we might run back up here to like 1180, 1190, but then we might reject again off the moving average and come back down here to 8.5 or something, right? Or we could potentially be forming this bear flag, as I mentioned, and we may be ready to break soon down to new 52-week lows. But in my opinion, I think it's decent. I think it's decently positioned. And also, I think it's pretty decent and it's on sale in the numbers in my eyes. And it pays you a dividend to own it, right? It checks a lot of boxes. And it's only $10 a share right now, right? It checks a lot of boxes. So, in my opinion, I think the reward outweighs the risk. If I was to start piecing in here, which unfortunately I don't have the liquidity to do so, but if I did, I always say, if I look at a stock and put out a video and I say like SWBI, I like it here in my eyes at $10. If I did have money, I would more than likely start building the position here. And as I said, if we happen to drop down to low 9s, 880, I would add to the position over time if I could, if I had the liquidity. So that's why. If it goes down before it goes up, I don't want to hear it. But, again, let's not beat it. But I do like this one. I do. And that's pretty much it. I'll end it there. So once again, this is stocks. Oh, wait a minute. We didn't even look at stock charts. Look at this. I got ads coming up. So that's what I mean. I ramble. Next thing you know, it's a 40-minute video. But I'm still right more than I'm wrong. Right? You gotta trust the process. Also, I'm choking for some reason. But you gotta trust the process. We come down here, bang, we bring up our RSI. So if we look here, we can see the RSI was overextended here, sub 30, slowly started inching higher over the last couple of weeks here, up to about 44 on the daily. We had the big drop down, right? We speak about the curling, the big trumpeting that takes place on a big drop or a big pop in the Bollinger Bands. And you can see we curled and continued downward, and you can see, look at the bottom band, curled all the way back up now to 973, right? But we just technically got to the top of this range, and that's why I'm saying we could potentially reject and come down to those high nines. But MACD did technically just cross to the upside, basically right when the ball dropped. It's been slowly climbing ever since. So obviously we'll have to keep an eye on it, but if it does break up here again in the fundamentals, that would make sense to me. 1161, back to the 50-day. What do we say here? Back to that 20-day, this fib here, yeah, like 1185. So that's a decent range there. The top half of 11.5 to 12. But we will see, because anything can happen. RSI on the weekly, down here at 33.7. So that's what I mean. We're just catching it now after it just had a big sell-off. So, can it continue off of previous weakness? Yes, of course. But again, I kind of like it at 10. And if it dropped down to 9, 870, whatever, probably wouldn't be too bad. But we can see the MACD tried to get back above to the upside. And then, of course, that's where we got numbers. So we could, again, potentially break and go a little bit lower, but I think the long-term RSI is going to start climbing this back up over the next couple of months and throughout the remainder of the year, hopefully. Excuse me. Yeah, my body's been fighting something the last week or so. Going back to 2024, let me see, what was this mark? 937. Right? So what do we have? Like 970. What's this low? 968. And what was that? 937. Right? If we drop immediately to this trend line, yeah, we're looking like 910, 915. Yeah, it's possible. It's possible we could retest those lines. Of course, we have the other 50-day moving average at around 1160. And we can see this previous pivot point last year, about 1179, it looks like. So we do, yeah, I mean, we could rally back up close to 12. It could be on the way there. But again, it will, if it does do that, then in my opinion, it will most likely immediately reject at that point and come back down. So if you did want to play this for a trade and you happen to, catch it right and it pops up, in my opinion, I would be in and out. I really would. Because the long term, while I do like it, still uncertain, right? Anything can happen. But if you do happen to step in here at, 10 and change, and you buy some calls, and then all of a sudden when the stock's at 1170 or something, you're in, you're out, secure the profits, right? But yeah, that's pretty much it. That's what we're seeing here. But yeah, I like it. I'll end it there. Once again, Stocks by the Numbers, I want to thank you for stopping by. If you have any questions, comments, or concerns, please drop it down in the comments section. And I'm usually pretty quick to reply. Give it a thumbs up. Helps out the algorithm. And subscribe to the channel. That is our handshake agreement. That is how you help me help you. But of course, more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, and they are very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Enjoy your weekend. Markets closed on Monday. Have a good week.